In this episode, we're talking about the new tax changes that are coming for business owners. All right, welcome to episode 12 of Access Granted. This is a really special episode, actually. We've brought Cedric Paquin in to join us because he's our senior tax specialist on the team. And today we want to talk about all of the new tax changes, the proposed tax changes that the government has put out recently for business owners. So with that, Cedric, maybe you can just enlighten us on what these proposed changes are.
Sure. So there's really three changes they're proposing. So that's eliminating the benefit of income splitting with lower income family members, which also includes multiplying the capital gains exemption, really eliminating the ability of taking funds out of a corporation and having it taxed as a capital gain rather than a dividend or a salary. And then really the last area is eliminating the benefit of having passive investments inside of a corporation.
Right. So could be potentially pretty significant for a number of our clients and a number of business owners out there. What do you think the big impacts are going to be on clients and other business owners out there?
So definitely for the income splitting, we're going to see business owners with less funds to spend on just day-to-day living expenses. So right now there's an ability for business owners to really multiply their tax bracket. So you can take, rather than taking a dividend, if you're already in a higher tax bracket, you can allocate some of that dividend to a spouse or to children in a lower tax bracket. So that means they're going to have less money to spend just on day-to-day living expenses. So that's going to be a big impact to them. Another impact with especially with the capital gains stripping rules that are coming into play. So that's limiting the ability of taking funds out of a corporation as a capital gain. That's going to impact intergenerational business transfers. It's going to impact post-mortem planning. So right now, the tax bracket, if you were to pass away with a corporation, you could pay as low as 25% tax on that capital gain. But with these changes, you could pay as high as 46%. So we're seeing almost a 20% increase just in the tax rate for post-mortem planning. So that's going to have a really big impact on the estate planning that we are doing for clients on a regular basis. And then what I think personally is going to have the most impact is if the proposals on the taxation of investment income or excess funds inside of a corporation. So right now in Manitoba, if you're at the highest tax bracket, you're paying 50.4%. But if your corporation has taxable income under $450,000, the corporation pays tax at 10.5%. So a business owner essentially has about 40% extra funds by retaining excess cash inside of their corporation and investing that. So what the government is proposing is really eliminating that benefit of that tax deferral. So what we're going to see going forward is, if this comes into law, is business owners are going to have less money for retirement. They're going to have to save more money for their retirement, and less funds inside of their corporation for things like a rainy day. If a couple tough years in the business, they're going to have to probably go out and borrow some money in order to fund their expenses, keep their employees happy. It's going to have a pretty serious impact going forward.
Yeah, when you think about all the planning that we've been doing for clients over the last number of years as it relates to their businesses and corporations, it's kind of flipping us on our edge on a lot of the stuff that we've recommended in the past, like investing through corporations and things like that. So with that, what recommendations are you making at this point for our clients and how they should be handling this or taking this information?
Yeah, we want all our clients to be speaking to their tax advisors right now. And don't do anything rash, because they are, at this point, it's just a consultation paper. But if and when they do become law, we're definitely going to have to revisit all of our structures, all of the business owner structures, and see what type of structure we should have going forward, and if there's any transition planning we can do in the meantime.
Yeah. Definitely, it's definitely something that needs to be looked into. Just make sure you're prepared, and like you said, I like that you're saying let's not do anything rash. We've seen not from our own clients, but I've seen that from other people out there who've made decisions based on what they thought might happen because of proposed tax changes or what they anticipated were going to be tax changes, and ultimately they never came to be. So I think that's a really good point. Is just hang tight but be prepared, basically, right? So. All right, well, with that, I think let's close it off. If you do have any other questions about the proposed tax changes and how they might impact you, please give us a shout or send us an email, cgwfamilywealth@nbc.ca. Send us in more questions. We love answering these questions, so please send those in. And be sure to visit us at cgwfamilywealth.com as well for more information on our team. So with that, thanks, Cedric. Appreciate you joining me.
Thank you.
Ready, aim, fire.